Happy Friday, TGIF. I know these are normally done on Thursday, but job reports came out today, so we want to report on that. But before we get into all that stuff, again, just want to acknowledge the thoughts and prayers going out to the California folks. We got friends out there and people in the branches that are impacted by this. So anybody and everybody, and friends of friends that you may know, obviously is not good. So we do want to acknowledge that and let you know that we are thinking of those folks. In terms of mortgage stuff, big day today, not in a good way for mortgage. Let's get into it. We'll hit the highlights here. Happy 2025. This isn't necessarily how we wanted to get started, but here we are. So at the end of the day, guys, here we are for January. Rates up to basically 7.25, according to Mortgage News Daily. You can see the chart. Look at the big red over here on the right. Remember, that is bad. That's because of today's job reports that came out. Usually not usually, but lately when job reports have come out, we've been like, oh yeah, but there's really no but on this one. The job reports came out and it was a strong, good looking job report. Unemployment went down, and those things are not good for mortgages because everybody's expecting the economy to get softer and weaker. And so when that happens, if and when economy is slower and weaker and unemployment goes up, that typically allows for things to cool off, like inflation, so that rates can come down. Strong job reports like today means that inflation could rear its ugly head again. And it's already being a little sticky and static. So, what we're all scared of is that if this, as well as the new administration coming in, sparks the economy, that's actually bad for us. So that's why rates have gone up. The unemployment, as I just mentioned, has been going up. Don't worry about the stats. Just you can kind of see how they've gone up from month over month and household surveys and what's going on. And then the bottom right-hand corner, it just shows that the job reports, this would be about the only hole that we could find, is that look at all the jobs for people 24 years and younger, right? So, whether that's college kids or high school kids or newly into the workforce, it's still real people getting real jobs. So that's the only hole we could find. Applications, as you would expect, not a lot of folks want to go out shopping and getting new mortgages and doing paperwork. And when Wednesday, so we saw this, when Christmas is on a Wednesday, it is the most unproductive 2 weeks because it splits the holiday up to where it's like some people take before and after, and some take the whole week off. So it's no surprise here of what's coming. But the interesting part, going down to the renters now, or I'm sorry, one more slide before we go to renters. Here's where there are more homes coming online, which seems like a bad thing, but it's actually housing is still tight in a lot of areas, a lot of states. You can see, what is that, Nevada and Florida, or heck, look at Vermont up there. My goodness, I didn't even notice that earlier. How many more homes are now listed in the last, basically pre-COVID type opportunities, but in the last 12 months, their listings are up 22%. So all is to say that seems bad, but it's good. Again, more opportunities for more buyers, more homes to buy for buyers could help stabilize pricing where maybe keeps things at least level. This is important, I think. Landlords, what's funny, and I don't agree with it. I mean, I don't know all the details, so I shouldn't say I agree with it, but fundamentally, I don't like when the government gets in for capitalism. If 6 landlords are charging too much rent, those people should move. So I know that sounds heartless, but that's the reality. But here's the stat I want to point out. Half of renters spent over 30% of their income on rent in 2022. So spent over 30% on rent in 2022. Next slide. Taxes and insurance, that is 32% of the total mortgage payment. And again, with fires like out in California or the snow stuff we're having here, I mean, just weather is making insurance way more and more expensive. But ultimately, this is the piece. Homeowners are basically going to have a net worth 40x greater than your average renter. And if your average renter is spending 30-something% of their income on rent, the average homeowner spends about that as well. But here's what makes buying a home really tough. As I showed you on that national chart for the homes with more listings, 34% of people say they're never going to sell their home. Now, things happen. Life happens. Divorces, babies get born, people die. It happens. Life happens. But the intent is at least a third of them don't want to move. 85% of homeowners still have rates locked in under 6. So you're going to have a real tough time finding these houses. Again, I'm glad that's going up. Inventory is going up. That's going to help. But these renters, if they're paying 30-something% of their rent, of their paycheck in rent, they can absolutely start looking at homeownership. I guess that's my point to say, like, as more listings become available, then some of these renters may come out of the renting pool to go buy a home if home prices become a little bit more stable. These are the markets where they expect, we'll see, right? But these are the areas, let's see, Florida and Arizona and New Mexico, basically. And the lead, which I thought was interesting because I would not have expected it, is Utah. They expect the 70% chance of declines in those areas for house prices. Time will tell, but again, it goes back to the theme here. Rents are getting expensive. Hopefully, house prices are stabilizing. We do think there will still be appreciation. These 5 markets, not so much, according to this article, but they're still a good time to buy. Rates do stink, but that's, again, if you're able to buy today, do it because it's putting a lot of people on the sidelines. Now on to the fun stuff. Gold, it's hit a 4-week high. Bitcoin, you've seen, I did see it dropped under 100,000, but it's amazing what's going on. And Breaking Bad, they're selling their house for $4 million. That's crazy. It's 10x the neighborhood's median price, but I thought that was pretty interesting. And then last, coming out of Austin, so my horns are playing tonight, so hook them. But those resolutions, they were good while they lasted. Apparently only 9% of New Year's resolutions last. I think it's like 84% of them are gone before February. So if you have a resolution, I hope you stick with it, especially if you want it. If not, it wasn't real to begin with. And the difference between a dream and a goal is a plan. So if you have a goal to do something, get a plan to make it happen, to make the resolution an actual plan. Beyond that, as always, you know what to do. Forward, share, subscribe, all that fun stuff. We wish you a great and wonderful, safe start to the new year. And stay warm if you're in the snow belt that's going on. Appreciate you, and we'll see you next week.